What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our Market Open live stream. Hope you all are doing great and are having a great week. We are down for the week. I do want to mention that S&P 500 is indeed lower for this week here, although we are seeing a little bit of that momentum come back in after the inflation numbers came out at 8:30 a.m. Eastern, which I have yet to look at because if my eyes have not given it away, I just woke up from a nap. I've literally been severely jet lagged all day. I've been trying not to sleep, only to sleep an hour before the market opens. I literally tried my best. I went to the gym, got my haircut, got my beard done, was literally outside for the most of the day, but with drowsy eyes. But then as soon as I came home after the workout, I just laid on my bed for 10 seconds and voila, I'm just waking up now. I had to snooze my alarm a couple of times, but yeah, that was quite the power nap. But we're gonna take a look at the numbers. Fed's balance sheet also came out yesterday after the bell. We got GDP numbers from earlier this week. We also have personal consumption expenditures, which came in, looks like on par with expectations, so 2.7% on a year-over-year basis, and also the core PCE numbers, which is the Fed's preferred measure of inflation, also coming in on par with expectations of 2.9%, which again is higher than where the Federal Reserve needs it to be. Like they obviously want this number to be closer to 2%. It's closer to 3%, which is 50% higher than what their target is. However, unemployment has also been worsening, and as a result, the market's expectations and the Federal Reserve's own projections are guiding us for 2 rate cuts for the remainder of this year. However, markets are obviously seeing a little bit of a pullback after 3 consecutive days of selling pressure. So S&P 500 this week, it's down over 89 basis points after 4 to 5 weeks of consistent greens, and the Nasdaq here also is down about 1% this week, although that could change. Pre-market, it's somewhat looking okay as the Nasdaq 100 is higher by 28 basis points and S&P 500 is up over 30 basis points. We got Tesla here 1.3% higher. Nvidia is pushing up over 29, almost 30 basis points as well. So we're seeing a little bit of that momentum come back in on the back of some, I would say, expected inflation numbers. So that's really what we got. But initial claims are sitting at over 218,000 for the previous week. And then if you come take a look at the GDP numbers, sitting at 3.8%. Continues to be incredibly strong. The economic growth is very, very good, which I do agree. I think with the rise of artificial intelligence, I think companies are going to even become more productive and more profitable moving forward because of all these cost cuts, while the productivity continues to stay the same, if not increase over the course of next several quarters. 6.6 trillion is the actual level of the balance sheet for the Federal Reserve. That's down about 0.2 billion over week here. And Reserve Bank credit is down to 1.2 billion. Significant reduction on a week over week basis as well. So, thank you so much for joining, everyone. Again, good morning. Make sure that you drop a like, drop your questions, and I will get to them as quickly as possible. And yeah, power nap, and that's how it happens. Glad you're getting some rest. Thanks, Mike. Appreciate that. And yeah, I mean, as soon as I just put my head on the pillow, laid down on the bed for 10 seconds, and just like that. That's how it happens. When you're drowsy, when you're jet lagged severely, you want to avoid literally laying down. But that was my mistake. I've got another flight tomorrow, so I'm going to be flying early in the morning tomorrow as well. So we'll update you guys as the plan goes. Okay. Thoughts on BMR and TNA? I know you will answer the top questions, so let's take a look at BMR. Now, look, I already mentioned that BitMine Immersion's movement is going to be very much linked to Ethereum, right? Because this is a company, this is a stock that's acquiring as much Ethereum as possible. And, we talked about $47. If you go back, watch my previous updates, my live streams, and a couple videos that I've covered BMR in, We talked about $47 as being a very, very important level of support. We got perfectly tagged at that level yesterday, got down to as much as 47.21 before bouncing right back up to 50. And that's also the 50-day moving average for this stock. Can we go lower from here? Absolutely, right? There's nothing stopping the stock breaking below this level, possibly getting down to $40. At some point, we'll also keep a close track of where the NAV is, like the net asset value for BMNR, but it is going to be trading on the back of crypto, right? More specifically, Ethereum. And if you come take a look at Ethereum right now, it is seeing a little bit of a bounce back higher, so 1.77% after the big breakdown from $4,000. So if I were to put down an area of resistance here, that's going to be sitting roughly around 4,063. That was a previous support, which we broke down for Ether and now starting to rotate back up here. That is going to be that level of resistance. And right now, pre-market, we're seeing a little bit of a dead cat bounce after being incredibly oversold. And as a result, BMNR is also pushing higher, over 1% pre-market once as well. So if you do get a breakdown for Ethereum, well, you better believe it. BMNR is going to most likely follow. And a breakdown below 47, next target is going to be closer to $40 for this stock. So that's where we are on this stock. Let's take a look at TNA. So that's going to be your small cap leveraged ETF. We're seeing obviously very, very strong momentum for TNA on the back of IWM, which has also been pushing higher. So, as mentioned in my previous updates and videos, when you are trading or investing in leveraged ETFs, any kind of leveraged products, it's really important for you to look at the underlying asset first and not the leveraged ETF, because the leveraged ETF is just a derivative. It's just going to track the underlying on a day-to-day basis. It's going to rebalance daily. So it's a waste of time to try to look at what the leveraged ETF is going to do. It's better to actually try to understand and analyze what the underlying index is going to do, because at the end of the day, the leveraged ETF is just going to track the underlying index. And in the case of TNA, it's much better to keep track of IWM because I think that's going to be a better understanding. It's going to give us a better understanding of the movement of TNA as well. So looking at IWM, very nice, consistent higher highs and higher lows. It did hit a new all-time high, and that's exactly. We also have to understand the leverage piece, because even though the IWM hitting a brand new all-time high, TNA is nowhere near close to its all-time highs of well over $56, $57. That's when the decay starts to set in for a lot of these ETFs. So IWM starting to roll over a little bit, consistent with the S&P and the NASDAQ, although we are coming up to this higher low, and this right here is going to be a resistance again around 240s, 241. If you do get a breakdown, obviously keep a close eye on this 229, 230 levels, aligned with this 50 simple moving average, as well as the previous area of support. It's going to be sitting roughly around $230, and that could be a good sort of target for TNA. If you're looking at a swing trade, that would be a nice little pullback on IWM from its all-time highs. It's going to be down a little bit over 6%. Nice little pullback, and that's going to be presenting some opportunities to dollar cost average into, or some entries for TNA as well. But mind you, it is going to be a little bit more risky, considering that it is a leveraged ETF at the end of the day. So I call that an unauthorized nap. They're the best. I know, it's crazy. So 2 more rate cuts are guaranteed then. Well, I think it's going to all boil down to how the labor market is over the next 3 months. Next Friday, we're going to get a brand new report for unemployment. So if you come over to our calendar, under economic calendar and high impact items, we're going to go to next week, right? So next week is going to be the beginning of October. And you'll notice right here, Friday, October 3rd is when we have the non-farm payrolls, right? So it's going to be a brand new report for unemployment, as well as the JOLTS numbers come out actually this Tuesday. So it's going to be September 30th. So it's not even going to be October. It's going to be September 30th is when the JOLTS numbers come out. And then, of course, the first Friday of every month is when we get the unemployment numbers. That's going to be Friday, October 3rd. So those 2 numbers, obviously, very important every month. It gives us an idea on where we are with this labor market. If it continues to show signs of weakness, and one of the most important metrics that we like to track for the labor market. Let's see who's going to get this. It's a very, very simple question. If you've been following the channel, if you've been following our videos, what is the most important metric that we like to follow on this channel to get a better understanding for the labor market, how strong or how weak the labor market is in the US. What is that number? What is the actual number or the metric that we calculate and then try to understand how good or bad the labor market is? It's going to be a very easy question. I think most of you guys should already be able to get that, but I want to see who gets it first. So definitely comment in the chat. And what do you think is the number that we like to track here at MoneyVest for the labor market to try to get a better understanding of how strong or weak the overall unemployment situation is in the US? Ooh, Milo says initial jobless claims. Again, I want to see more and more answers. Joel's, Lucky says. Wow. I'm surprised. Definitely do participate in this question and comment in the chat. What do you think here at MoneyVest? What is the number one metric that we like to use for the strength of the labor market to better judge whether we're good or bad, whether we're strong or weak in terms of the labor market here? Leading indicator of recession is initial jobless claims, Milo says. And I don't disagree with you. I agree. I think initial jobless claims is one of the most important metrics. But there is one more metric that I like to keep track of to get a better understanding of where the labor market is, how strong or bad it is. And, depending on that number, this gives us a little bit of a hint on what the Federal Reserve is also most likely going to do, because Jerome Powell has been quoted that number many, many times during his press conferences. Wow, I'm actually quite surprised, you guys, that we're not getting more answers about this. The GDP, the Hooker Index. Again, for anybody who's joining in, what is the number one metric that we like to keep track of for the labor market to better understand how strong or weak the unemployment situation is in the US? What is the metric that we calculate and we keep track of? Let me see. I want to see more and more comments in the chat. We got over 250 people watching. I definitely want to see more people try to answer this question. And again, if you've been a long-time viewer, you should already know this. Home builders, GDP. Obviously, GDP is a bit of a lagging indicator in itself. Home builders also a little bit of a lagging indicator, and it's not been a super leading indicator. Construction jobs. Yes, construction jobs definitely very important because they do fall with every recession. So do home builders, and a lot of these manufacturing positions, private payrolls, a lot of them absolutely tank during times of recession. Initial jobless claims obviously being a little bit more of a leading indicator because it's week over week, so the lag factor is significantly lower. But one of the indicators that we like to keep track of, which I've talked about on the channel before, which surprisingly nobody's able to guess, is the job openings to unemployed persons ratio. And this is something that we have talked about on the channel so many times. This is a spreadsheet that I've talked about. I've calculated this number, which is the job openings in the US. So how many current job openings there are, how many positions that are currently jobs open for versus how many people are actually unemployed. Now, there is a mismatch, right? Because sometimes the degrees, the location, the pay point, everything does not match one-to-one for all these jobs to get absorbed in the economy. So there always will be their mismatch. But this ratio is very, very important because during times of 2021, 2022, this ratio got up to as much as 2.5, meaning the labor market was extremely healthy. There was 2.5 jobs for every one person that was unemployed in the US. Plentiful jobs, right? So over 2.5 jobs for every one person. And now this number is less than one, meaning there's not even one job for one person that's unemployed. So that number obviously is weakening. So there's more unemployed persons than there are jobs in the US. So this metric also very, very important because Jerome Powell himself has quoted this number multiple times. He actually talked about this number many, many times in the past. And it's also one of the metrics that they use to better gauge how strong or weak the labor market is. Initial claims, yes, they definitely talk about that as well because it's on a week-over-week basis. But this right here is way more important, and this is exactly what Jerome Powell has talked about in his press conferences many times. Also, as recently as the last one, talking about how this number has weakened and has now come down to below 1 for the first time in 4 years. So something to definitely take note of, which is very, very important. Yes, labor participation, most indicators are released at the start of every month. Only initial jobless claims are released every Thursday, and I think is the most accurate. So again, initial jobless claims is one of the many indicators, and yes, it's on a week-over-week basis. Everything else is on a month-over-month basis. And what we're trying to really understand with this initial claims here is the moving average. Initial claims itself is useless, right? It can have a lot of seasonal adjustments. It can have a lot of factors that can influence initial claims to go up 1 week and then come back down. But really what we're focusing on is the moving average of the initial claims themselves, and really the moving average kind of representing the overall change. And the moment this number, the threshold really is 400,000. The moment this number gets up to 400,000 is when things actually start to become quite concerning. Every single time you'll notice in the past, this number, as soon as it crosses the moving average crosses over 400,000, is when a recession most likely is imminent. And right now we're sitting around 218,000 on an absolute basis. But then if you take a look at the average for these numbers over the last several weeks here, you'll notice that we are still well within 250 to 200,000. Yes, there's a little bit of volatility here week over week, but that number on an absolute basis doesn't give us any insight. It's really on a trend basis. It's more of a moving average that we have to really look at to better understand how good or bad the economy really is. So that is something to keep in mind. Okay, coming back over to the markets here, we got Nvidia struggling a little bit under 178. We got Tesla $430, S&P 500 and QQQs, all of them slightly pushing up here. Coming back over to the questions, we're going to take a look at Oscar Health. And again, good morning from SoCal. Is that Southern California, I assume, Sam? Who's buying crypto? I'm actually thinking about putting some orders in. I did pick up more BITX, but then I'm also looking at Ethereum. I've got a $51 put on BITX, which is now in the money. I think I've got a couple of them that are now in the money for this Friday, actually for today. So I might actually get assigned on a couple hundred shares of BITX today, considering that, you know, my $51 put is in the money, unless of course BITX takes out 51 again, it reverses back up and puts me back out of the money. But I'm more than happy to take that assignment. And of course, crypto has been rather weak. Bitcoin's now down to 109,000 at that support of 107. So I don't mind actually acquiring more shares of BITX in and around those levels. So I'll update everybody on the Discord about that. Kartik, what do you make out of the situation we are in, meaning Federal Reserve cuts rates and yet 10-year yield goes up, dollar weakens more, gold and silver goes up like crazy? So yeah, I mean, it's an interesting scenario. It is definitely an interesting situation. For where we are. The Federal Reserve is most likely going to cut rates, and if that leads to somewhat accelerated inflation again, then we are back to square one. A lot of the progress that Jerome Powell has made will be undone if they are too aggressive with these rate cuts, and that leads to inflation going back up again. And of course, unemployment is also something that they are watching as part of their dual mandate. As I mentioned before in my past videos many times, I think it's really important for the Federal Reserve to take an approach to be very reactive on the way down and very proactive on the way up. Reason being is because just this timing of these interest rate changes. I mean, on the way up, they cannot jack up rates as quickly as one day. Like, they cannot raise rates from 0 to 5% overnight, right? Because that will shock the economy. That will most likely crush the economy and will put us into a recession within a day. So when they are raising rates, they have to take a very, very steady approach. They have to pace themselves. They have to spread out these rate hikes over many, many months. And so as a result, they need to definitely be a lot more proactive in sort of getting a better feel for whether inflation is on the rise or not. So that's where they dropped the ball back in 2021, 2022, where rates were too low for too long, inflation got out of control, and they were too late. So in my opinion, they should have obviously been a lot more proactive. But on the way down, though, they can be more reactive to the situation, because they can indeed cut rates fairly quickly overnight. They can bring them down to 1%, 2% overnight, and the economy would love that. companies would love that. They will start hiring again. There will be significant growth in quantitative easing again. And so as a result, you cannot apply the same policy to fix both situations. If their dual mandate is different targets, they need to also employ different approaches to fixing both of those things. So I've already mentioned that I think 1 to 2 max 2 rate cuts is more than enough for this year. But of course, if you get 3 after we just got 4 last year, that's 7 rate cuts in a matter of about September of last year to December this year. So that's 16 months. So we got 7 rate cuts in 16 months. And then if we get another 4 or 3 to 4 next year, that's over 20 rate. No, that's, so 4 plus 3, 7 plus another 3 to 4. Yeah, that's like 10 rate cuts. That's about 200 basis points worth of cuts in a matter of like 24 months. That's a lot of quantitative easing coming in. And if that end result ends up being inflation moving higher, then we're back to square one. It'll essentially undo everything that what we worked for over the last several years, since 2022 when this first started raising rates. Okay, well explained and focus to switch on IWN. Thanks for your patience and clarity. Perfect. Thank you so much. Let's take a look at some more questions here. That's the ratio I meant. Give a name to that ratio. MVI, employment ratio. Lucky. Thank you so much. That's a good idea. We'll try that. Let's take a look at SEZL, whatever that stock is. I haven't looked at this company. Sezzle. Is that how you pronounce it? Sezzle. Very strong support, I would say. It's $77. Seems to be incredibly oversold, and there is some institutional activity also coming in for this company. We got a massive gap to fill in, a little bit of that resistance sitting roughly around $98. So that is going to be a resistance with a very strong support at $77. And right now, it's just been consolidating sideways in that range. Market cap, $2.8 billion. So it's a pretty small cap stock at the moment. Yes, Vault, already went over your question here. At what point do we panic? Riley, we never panic. We never panic. Why would we panic in the market? We never panic. If anything, or if you mean when does the market get to panic? Obviously we've got the Moneyvis Index where we had the panic reading between 0 and 2. We got down to that level back in April. So you can see 1.76. That was a state of panic in the market, and that's when obviously we as a community were a lot more aggressive with our buying opportunities, with, of course, our dollar cost averaging, because we understand the risk reward is very much in our favor. Volatility was extremely high. The buying windows are usually shorter with these V-shaped recoveries that we've come to see for such a long time. But of course, 2022 was anything but a V-shaped recovery. But, if you're not asking about the market, if you're asking about when are we going to panic, we are never going to panic because we're always ready. That's what we have to condition our minds to do is it doesn't matter what happens in the market, you're always prepared. And one of the best ways, I've kind of explained this in our Discord as well, is you want to position yourself in a way that the best outcome, the good positive outcomes can generate life-changing returns, whereas the worst outcome is not going to blow you out of the water, right? It's not going to blow up your account. So that's how you have to think about proper risk management is even the worst case scenario is manageable, something that you can actually manage. And that comes from conviction levels, position sizing, having proper stop losses, doing your research, a lot of factors, right? A lot of things can actually help you build conviction. Even something as simple as proper position sizing can be a game changer for a lot of people, because I've seen people stressed out having too much in one stock or having a large position. In other words, not getting the position sizing down right. And people who just, have such a small position that they don't care at all, right? So you have to find the right balance. If you are going to be investing in individual stocks, it's really important to find the right balance for position sizing, because too much of it and you're stuck to the screen, too little of it and you don't care at all, and it's not going to be making a difference. So you have to find the right balance where you're comfortable with that position size and the worst outcome is not going to blow you out, and the best outcome is actually going to lead to some pretty good returns, pretty incredible returns, and some life-changing wealth. So that's what you have to really understand is position sizing, very, very important. Okay, but yeah, in general, we don't panic here on the channel, here at MoneyVest. If anything, we are more excited. We're always happy to take advantage of those deals. Okay, let's take a look here. IREN. Have a look at IREN, any strong support. So I know there's a lot of interest on this stock. A lot of people in our community have just been going all in on this stock here, given, its momentum. And to be honest, it was one of the best trades one could have taken back in April when it was at $5, got up to $46. So almost a 900% rally for this stock here. And yes, I will be doing some due diligence, but just be very, very careful, where you're buying this stock, because, just take a look at the weekly chart. It is through the roof. The 90 RSI, you've got the MACD, you've got the L3 banker oscillator. Everything is extremely overbought. And all I'm going to point to is this in the past, every time it's gotten to these overbought levels. Just take a look at the amount of selling pressure that's come in. 62%. 48%, this right here, a 64% sell-off, and this right here, a 69% sell-off. So not saying that it can't go any higher. It certainly can. Any stock can obviously go parabolic, but how long is that going to go on for? And it's not a question of if it's going to correct and pull back. It's just a question of when. So you obviously don't want to be holding the bag, and people who are entering right here or buying here obviously just have to be aware of where we currently are, which is a very, very overbought and stretched technicals to the upside. So you got to be very careful. As long as you're comfortable with those decisions, hey, be my guest. I'm definitely doing more research and due diligence on this. Any kind of next daily pullback, weekly pullbacks, especially down to those moving averages, I am very interested in this from a tradable perspective, but I just cannot see myself buying at 45 when the RSI, MACD, everything is just through the roof, and majority of that move has already happened. We've already seen a 200% rally since the beginning of August, right? So just 2 months, this thing has tripled in value. So just be extremely careful with where it is and where you're buying. Okay, let's see. What do you think about Sweetgreen? Their stock is tanking. I like their food and it's healthy. It's good time to enter. Rashid, it's kind of funny you said that because I went to Sweetgreen literally when I was in Boston. It was my first time there. My cousin worked at Sweetgreen for a very brief 2 to 3 months just to make some money. And my family in Boston, my uncle and my aunt, they love it. They absolutely love Sweetgreen. I went there once. I had a nice salad. And yeah, it's kind of funny that, I didn't even know that they were a public company until after I went to their establishment, had a nice little salad, and then looked up. I was like, oh, wow, this stock is tanking. Yeah, but of course, from its highs of 43 down over 81%, I would definitely put this on the watch list for a potential swing trading idea. But looking at their fundamentals, they're still not generating any kind of profit. Yes, there is some path to profitability, but revenues are growing consistently. That's good. But any kind of food business, margins are lower, obviously. Chipotle is a prime example, which has also been struggling in that same category, I would put it. And again, both of these stocks, I would put them down on the watch list as a potential reversal trade opportunity as well. So they certainly have potential, but it's just it's going to take some time for them to find their support, for sellers to exhaust itself, and then of course start to reverse back higher a little bit. Okay, let's see. Tesla 450, BMNR, good entry point at this level. So 47 is the entry on BMNR. In my opinion, that's the support that I have for this stock. And as I said earlier, it's going to be very much driven by Ethereum. The movement of Ethereum is what's really going to drive the price of BMNR. What is a good percentage to have as cash? So let's do this. Let's just do a very quick poll. And look, markets are at an all-time high. Individual stocks are at an all-time high. We're trading at a 25 multiple. Volatility is pretty low. MoneyVest Index is neutral right now. Let's just do a very, very quick poll on what percentage cash are you currently sitting at, okay? So we'll do 0 to 5%. We'll do 5 to 10%. Then we'll add an option for 10 to 20%. Then we'll add 20 to 30%, and then, there's no other options, huh? We'll just do more than 20%, so greater than 20%. So let's just do this poll just to get a better idea. And again, if you are like some crazy numbers, 40%, 70%, 100%, definitely let us know in the comments. Because that will obviously not, more than 20% can mean many things, right? So more than 20 can be 21 or it can be 99. So definitely let us know in the comments if that number is very far out from 20%. Wow. Zero Aloof, 90%. 70%. We got Norcon at 100% cash. Not invested in anything. 100% I swing futures, nothing else. Gus says, incredible. Larvis, 55%. So definitely participate. Smaller data set, but gives us a bit of an idea on where everybody is at right now. Russians, 5%, 24, 20. Okay, we got 45%, 30%. Wow. You guys are sitting on a lot of dry powder, it seems like. You guys are ready. You guys are really ready. If anything, you guys are cash ready perfectly here for any kind of dip. Lucky is 0, so that is also not where we want to be. Lucky, you want to at least have a little bit of cash. You never want to be all in the market. I think the only time I could justify being all in is when the markets are down, like let's say 30 to 40% is when I could actually see myself being all in, taking on a little bit more leverage, just a little bit, just a little sliver, and start to kind of put more money to use. But yeah, I mean, given where we are right now, I would not want to be all in and not have any cash on the sidelines. I take my time and grow. Sean says 40%, 85%, but getting ready to deploy some capital as you say. When the VIX is high, it's time to buy. Absolutely. That's one of our core philosophies. When the VIX is high, it's time to buy. 100%. At least a little bit in the market and not out of the market will be fine. Yes, it's just about finding the right balance and whatever works for you. We've talked about this in the Psychology of Investing courses because there's no right or wrong answer. Yes, there are some principles of finance that everybody should try to follow. Is obviously live below your means. Your revenues should be more than your expenses. That's going to help you generate more savings and more investments. Those principles are good, but when it comes to investing, again, there are some very basic principles to follow, but at the end of the day, it becomes very situational. There's a lot of nuance to personal finance and investing and trading, and that's why it has to be very, very situation specific. There's no one rule that fits everybody, one size fits all type thing. It's very, very personal. And if you're comfortable with, 30% cash, 50% cash, anything more than 50%, I would say, again, going back to the principles of finance, you might be a little bit underinvested because you want to actually compound your wealth and you want to, allow for the markets to generate those returns for you. Unless, of course, you've got a strategy. You are deploying capital through swing trading or options trading, and then you are rotating in and out. You're a lot more tactical and more strategic. That's totally fine. But as a long-term investor, anything more than 50%, you start to become underinvested in the market. So you want to be looking at ways on how you can actually deploy capital at good opportunities. And then, of course, play with that cash exposure, which can fluctuate between 5 and 30%. That's where it fluctuates for me. It's between 5 and 30%. Given the market environment. So at any given point, I would be at least 70% invested between stocks, options, real estate. So those are so Arun, I'm part of the community, but when I see you buy, it's already gone up. So again, trading and investing is different. So if you are looking at tradable alerts, we're playing on momentum. But if you are looking at long-term investing channels, we're only buying when the VIX is high, when the money vest index is low, when the signals are actually in our favor, and the risk reward is actually in our favor to deploy capital. So again, long-term investing, dollar cost averaging at very, very good deals at the buy target, but trading is different, right? When you are looking at momentum trading, which is what you're seeing in options alerts, as a lot of those are momentum trades, we are getting in on that momentum. And of course, we've got our price targets and profit targets to take advantage of, and then getting out. As I mentioned before, stop losses, having proper stop losses, having proper risk management, very, very important when you're trading. With long-term investing, I don't care about stop losses because I'm planning to hold them for a lot longer, for multiple years, as the thesis starts to play out. So anyway, market's about to open in just a few more minutes here. And Carlos, yes, I will definitely hit you up when I am in Chicago. I do the same here. Have investment accounts in different portfolios will have different strategies. So we've got an options portfolio, long-term investment portfolio, as well as we're going to be starting a swing trading portfolio very soon as well, which I think is going to be very, very lucrative for a lot of members. Do you open maybe options when the market is high? Like, would you sell a put, or it's best when the markets are lower? So selling puts usually best when the markets are red, when you are seeing more selling pressure, because that's when the put premiums will jump and you'll actually get a more value for your put that you're selling. If you're selling it on a really, really green day, then premiums are going to absolutely suck. And the return on collateral is not going to be as great as when the markets are red. But try to gain momentum, but lose in buying options. Maple says, Thomas, the percentage of cash in brokerage account or in the banking account. So that's in the brokerage account. So you should already have a savings fund, set aside. So we've got a liquidity framework that I've brought up many times in the past. This is what I usually follow, is that you have a minimum, months of expenses saved up in liquid cash, whether that's 3 months, 6 months, 12 months, whatever is, whatever's convenient for you, limited, sufficient, secure. And then this is the percentage of your cash in the portfolio, right, for your investments. Because anything over and above this emergency fund, in my view, should be in your brokerage account. And then you can just kind of play around with that cash exposure, depending on the market circumstances, whether you want to be 10% cash, 20% cash, 30% cash, 5% cash, depending on, like I said, the market environment. And this is, again, separate than what you would have as your emergency fund, which is, again, liquid cash and a money market fund earning 3 to 4% right now annually. All right, so we've got 43%, almost half of you are over 20% in cash right now. 10 to 20% are about, 22% are about 10 to 20% cash exposure. 17% are between 5 and 10, and then 18% we've got is 0 to 5%. So I would say 66, 67, 2/3 of you guys are sitting on more than 10% in cash exposure right now in the portfolio. So are you buying options 1 day to expiration? How is all your money gone? Yeah. Options 1 DTE can be very, very volatile, very risky. So definitely do them with proper risk management here. Can you show how you invest in dividends? For example, when you buy a stock, when do you sell depending on the ex-dividend date? I've been analyzing MSTY if you want to use that. So dividend investing, I would definitely take a long approach to dividend investing, because really what you want is your yield to cost to be as high as possible. Because as appreciation happens over many, many years, your yield to cost can literally go up to insane amounts, right? So right now, if you're buying a stock, let's just take that example, MSTY, yield max. Right now, your yield to cost, dividend yield 375%, because this is an options income strategy. So I'm not going to take this as an example, because again, it's going to get adjusted with the price itself, with the amount of dividend that you're going to collect, which again is $1. I'm just going to use Realty Income Corporation, because also, take a look at how the performance has been. It's down 30% since July, right? So, and as the markets have rallied quite a bit, since November 2024, this thing is essentially flat, right? It's not really gone anywhere. To make matter worse, since November 2024, Thursday, 21st, it's actually down over 32%. So again, just be very careful with these. But with Realty Income Corp, by the way, markets just opened here. We got a yield around 5.39%. So that's the market yield. That's what you would get if you were buying the shares today. But if Realty Income Corp stock continues to appreciate, they continue to increase the amount of dividend they pay out. And if you are holding on to this stock for many, many years, your yield to cost is going to be much higher in the long run. It can get up to 10, 15, 20, 30%. And that is true passive income. When people talk about passive income, it's never really passive, because you've always got to work. You've always got to do at least something, to generate that income. It's never truly passive. The only true passive incomes, of course, is the government bonds, corporate bonds, dividend stocks, where you don't literally have to do anything and the money just shows up at the door, right? Because, the government's writing you a check, or the companies are writing you a check. So that is true passive, and you want those passive yields to be as high as possible. And again, a very, very strong case study is Warren Buffett's investment in Coca-Cola. He's got a yield to cost at 50%. 50% of his initial investment. He's getting $500 million in dividends every single year off of $1 billion investment in Coca-Cola many, many years ago. Why? Because his yield to cost is significantly higher. So dividends, if you are planning to invest in dividends, I would take a very, very long approach where it starts to snowball with significant increase in your yield to cost over the long term. So yeah, markets open here. Very quick breakdown. We got Tesla here just sitting shy of 429. Nvidia 177. We've got QQQ's flat, S&P 500 flat. Looks like we're gonna have a red week, unless of course the market just takes off right now. Ethereum struggling a little bit, 3,900, and of course BMR. A lot of these crypto stocks will also trade in correlation with crypto here. And of course, Bitcoin trading just over 109,000. I'm probably going to have to take assignment on my BITX at $51, unless, of course, BITX can turn things around here intraday and get back over 51. What do you guys think? Is it going to be above 51 or below 51 here today? We're coming very, very close to the last day and very close to the strike as well. Anyway, so thank you so much for joining, everyone. Again, link's going to be down below if you're interested in being a part of our community. Link's going to be down below with that additional 30% annual discount until the end of this month. So just 4 more days left if you are interested in joining and, of course, getting access to the Discord channel, engaging with all the members, getting access to all the trade alerts, again, portfolio updates, options portfolio updates every week on Patreon, educational material, as well as the MoneyVest website access as well. So, again, thank you so much for joining, everyone. Have a great weekend, and I'll see you all on Monday morning for yet another week in the markets. And don't forget, next week we also have the JOLTS numbers as well as the unemployment numbers also coming out, because it's the first Friday of the month of October. We're going to be wrapping up the month of September here very soon. Thank you so much. Happy investing. I'll see you all in the next live stream. Take care.